Okay, so I'm just gonna go through a simple thing on what to trade. So if you're trading systematic options, right? This video is pretty much just about systematic options. I want to make this guide entirely about systematic options. Someone who's new, right? Trade SPX options, leave everything else. That's it. Nothing else. There is a smaller SPX. Basically, CBOE went ahead and made a cash settled mini SPX named as XSP, something like that, or XPX, and there's no liquidity in that, like pretty bad liquidity. So don't trade that. Trade SPX. It's a very big index though. It's about $600,000 per lot. So it's a pretty big index. You can see it's about 6071. So that multiplied by 100, because in US everything is multiplied by 100. The contracts, the lot size is 100 for everything. So it's a very big lot size. You can also trade the Bitcoin index, but again, it has very different volatility, very different liquidity, and the liquidity is much lower. And because it moves very differently, there's not much data on it anyways. So there's not much long-term data on it, so trading it would be probably hard, right? But yeah, again, apart from that, what I want to go through is edge, wings, hedges, and brokerages. Okay, that's what I want to go through, and liquidity and slippage. So look, if you're trading SPX versus SPY, liquidity is obviously much better on SPY. Slippage is much lower on SPY, but you have to consider that it's a non-cash settled option, right? It has not like the option on SPY can always be called upon, can always be exercised, and then your option will basically can be exercised like midday. Okay, you don't have to wait up until expiry, and it's physically settled. So the last 15 minutes of the expiry of SPY options, you cannot even hold the option, right? So most of the most for option seller, like most of the actual money is made in the last 15 minutes, because that's when the option goes to zero, right? So if you're on the ATM option, you can't make money in the last 15 minutes, so you lose upon that opportunity, right? So SPY, if it was cash traded, would have been a good option, but currently it's not. Plus you'll have to pay more brokerage. A lot of brokers charge $1, right? So if you're trading SPX, you're basically trading 10 size of SPY. So you'll have to pay much lower brokerage, because your per contract value is so high, you can just trade more, right? That's one thing. The other thing that I want to go through is capital requirement. So capital requirement in US markets is like this. You'll have to pay per lot, you'll have to pay only how much your wings are. Okay, so if you are taking a, let's say you're shorting put, which is at 6071, right? Let's say you're doing that. So let me just go through like an account. Let me just open a tasty trade account or something like that and just show you it live. Okay, so, and I will go through the brokers and part probably later in some other video. This one I just want to make you understand the index. Is it not logged in? Okay, it logs in. Okay, so SPY, you can see these are the options. So let's just say I want to short here. Yeah, I want to buy this. Let's just say I want to buy this. This is the option. You can see it's $0.23. So everything is points. And you can also see that, let's just say, let's go for tomorrow expiry, because today's expiry is done. So let's say 604. We have a $1.78. So this is $178 worth of premium for 604, because this would be multiplied by 100, right? So we go and try to buy this. Let's say, for example, I try to buy it. You can see, let's say I remove this one. Let's say I just, I don't even use this, so it's a little hard for me. Yeah. So let's just say I don't want this one. I want to delete this leg, and I just want to go in and buy ATM call option. put option, whatever. This one, I just want to buy it. This one costs me $184. That's what it is for a normal SPY option. But we don't want to trade SPY option. We want to trade SPX. So SPX, it's gonna cost you to sell a single lot without anything. Let's just say, let's go to tomorrow's expiry. I think this is end of the month expiry. Yeah, this one. Let's just go here and let's just do SPY options. It's gonna cost you 121k if you just wanna sell this particular call option, and max loss is obviously 604 840, right? Because that's the size of the option. Like, sorry, that's the size of the index. Let's say I take a hedge and I buy this one. Now your max loss is just $820, and now your buying power that you need is just $820. That is what is absolutely insane about this क्या बोलते हैं, about trading in US options, is that it gives you this advantage that you can just hedge yourself right around here, and this is it. This is the cost. That's why it's so efficient for you to trade US options. But look, here's what it is. If you try to buy a penny option, a 0.05005 option, you'll have to go pretty far away. So the realistic cost of buying an option is somewhere close to $15,000 for puts, and somewhere close to $7,000 to $8,000 on calls. Okay, so if let's say you want to come over here, you want to sell this one, and let's say you go back and you buy like this option, because tomorrow this is going to be $0.05, right? So look at this. This is taking you about $13,000. That's what it takes you. So whatever your max loss on one side is, that's what it costs you. So about $13,000 to sell a spread. This is the realistic cost per lot. I would say this is mostly realistic. This is what I've also seen in my backtest. This is generally the margin cost. If I go buy a $0.05 intraday option, this is generally the cost, about $15,000 per trade. Generally more on the put side, less on the call side. Okay. So yeah, that's what the capital requirement, the size I've already explained, liquidity and sleepage. Sleepage, you can see, say somewhere when you're exiting your options, it's going to be about 5% of the option value. So if this is 2160, you can just quickly say 2160 into 5 by 100. So this is what general cost of an option is in terms of intraday cost, right? So it's going to be about $100. So if you're trading $21.60, your sleepage is going to be about $1. So $20 option, about $1 in sleepage if you're trying to exit out of a trade. So if you're trying to stop loss out of a trade, on entry it's much lower. I won't say that it's much. So if you are limit entering at 0.05, your stop loss is probably going to be just about 1 to 2% of the option price. So about 1% is like about 20 cents. Okay. And this is going to be like your cost to enter. So your cost to enter is generally 0.1. That's what the cost to enter is generally. Okay. Like not 0.1, like 0.1 of the dollar. So about 1%. No. Yeah, 0.1 to 0.2. So about like 1 to 2%, something like that. Yeah. It's pretty low. Okay. You don't have to worry too much about it. The entry cost is very low. The excess cost, I have told you, it's about 5% of the premium, max around that lines. If it gets very liquid, it can shoot up to 10%. But that only happens on mostly FOMC meetings. So it's not insanely bad, but yeah, sometimes it can get bad. It's not as liquid as Indian options, but then you know what? They are very liquid, very, very liquid. You can see the volume, right? 5.55K. 3.84K. I'm not sure if this is the value for like for current or like 3.84K. You might say, oh, that's low. Dude, it's insane. Like, just do the mathematics. It's like millions and millions of dollars of worth of volume. I'm not sure if the entire volume or just like volume right now. I'm not sure about that. But these options also trade aftermarket. So I'm not sure when the aftermarket starts. Is currently obviously not running, but these options are also available to you after market hours. So options are available, the index is not. Futures are available though. So you can go into like a little far out of the week, and you'll always see they also have liquidity, they also trade. In India this doesn't happen, right? If you go a week later in India, the liquidity is gone away, but you can see that there is liquidity in these options even after like a week from here. And generally if you try to put a trade, okay, this was an EM option, so that's why it had less liquidity, but generally you will be able to find some liquidity and you will be able to trade these options like a week far away. I can go about a month far away and you'll still be able to trade these options. You'll not find like much liquidity issue on these. Generally I haven't found a lot of options, like a lot of problems on these trades. Generally you can take them, but I think the volume right is the volume right now. I think if you try to trade this, you'll be able to trade it, though I'm not 100% sure. Okay, but you should be able to trade it. Okay, so that's yeah, that's for the volume part. I know a person who does like quarterly, or I would say monthly options in this, and he is able to do it. I do personally 6 by 7, so I would do a week later options, so like probably six or something, and generally I have no issues putting those trades up. Okay, so that's one. The other parts we'll get into in the next video. Okay, yeah, that's it for this video. I'll see you guys in the next one. Till then, bye bye.